Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what makes these big companies tick. Today we're diving into Cannae Holdings Incorporated latest proxy statement. And folks, there is a lot going on under the surface, especially with the proxy fight brewing. Think less shareholders meeting more corporate showdown. Alright, let's start with the big picture here. Cannae Holdings Incorporated is a company that basically invests in other companies. They say they operate as a long-term owner, aiming to get control and governance rights to manage these businesses for the long haul. Now, this report is dated the 21st of October 2025, and it is a preliminary copy, meaning it might change. But the core message is clear. There is a shareholder meeting coming up on the 12th of December 2025, and the company's board is strongly recommending you vote for their director nominees. The big story here is an activist investor group called Cannae Capital Management LP. They've let Cannae know they plan to nominate 4 candidates to the board. Cannae's board is urging shareholders to vote only for their own 4 candidates and to disregard anything sent by Cannae. This is pretty intense stuff, basically a fight for control of the company. The first item on the agenda is the election of directors. The company is nominating Erica Meinhardt, Barry B. Mollett, James B. Stallings, Jr. and Frank P. Willie. You'll notice the proxy card this year looks different because of something called universal proxy rules. It has to list Cannae's nominees to Mona Abuel Nagab Benjamin C. Dusterforth Dennis A. Prieto and Kriel Scheibel. The company wants you to vote for only their 4 candidates and to be very careful not to overvote, meaning vote for more than 4 directors in total. Let's touch on what Cannae is doing. They say they aim to generate returns by targeting industries where their board has expertise, leveraging unique investment opportunities, and optimizing their portfolio companies. Over the last decade, ending the 30th of September 2025, they claim to have created about $3.3 billion in value. They've been busy too. Since March 2021, they've returned $970 million through share buybacks. They've also started a quarterly dividend and increased it, returning about $32 million per year. They've partnered with Jana Partners and acquired a majority stake in the Watkins Company, a 157-year-old flavoring products business. They've also invested in Black Knight Football Club, which owns AFC Bournemouth, a soccer club, and they claim the club's revenue has grown significantly since their investment. Let's quickly look at their director nominees. Erica Meinhardt has experience from Fidelity National Financial. Barry B. Mollett brings over 30 years of leadership in the food service industry. James B. Stallings Jr. has over 25 years of leadership and investing experience in the IT sector. And Frank P. Willie offers deep legal and leadership experience, having served as President, Vice Chairman, and General Counsel of Fidelity National Financial. The company believes these individuals have the right skills to guide them. Now for the juicy part, compensation. For 2024, their named executive officers included William P. Foley III, who stepped down as CEO in May 2025, Ryan R. Caswell, who became CEO in May 2025, Brian D. Coy Peter T. Sadowski, and Michael L. Gravel. Notably, Richard N. Massey was their former CEO until February 2024. Let's look at the numbers. In 2024, William P. Foley II's total compensation was a whopping $38 million. Ryan R. Caswell's was just under $8 million and Brian D. Coy's was about $1.8 million. Michael L. Gravel's exceeded $1.2 million. Richard N.'s Massey received $2 million in 2024. The largest chunk of Mr. Foley's compensation came from stock awards and payments from an investment success incentive program. Looking at the stock awards granted in 2024, Mr. Foley received over $21 million worth of restricted stock units. Mr. Caswell received over $6 million worth of restricted stock units. As of the 31st of December 2024, Mr. Foley had over $11 million worth of unvested restricted stock. Mr. Caswell had over $7.6 million in unvested restricted stock. This table is interesting. It shows the relationship between compensation paid and the company's financial performance. For 2024, William P. Foley II, as the principal executive officer, had a compensation of over $36 million actually paid. The company's total shareholder return that year was over 54%, but compared to their peer group, which saw over 184% return, it looks a bit less impressive. Their net loss for 2024 was over $304 million. The company's non-employee directors received substantial compensation too. For example, Hugh R. Harris received over $253,000 in cash and stock awards in 2024. Barry B. Mollett received over $354,000. They're also asking to ratify the appointment of Grant Thornton LLP as their independent registered public accounting firm for 2025. They previously used Deloitte and Touch LLP. A key proposal is to declassify the board. Currently, directors serve staggered 3-year terms, meaning shareholders only vote on a portion of the board each year. They want to move to annual elections for all directors, which could give shareholders more say. Then there is a shareholder proposal from Bulldog investors pushing for the company to hire an investment banker to explore options to maximize share value. The board is recommending shareholders vote against this. They believe they are already actively managing the company strategically, and engaging an investment banker would be an unnecessary expense. Looking at who owns the company, the Vanguard Group holds over 11% and BlackRock holds over 10%. Notably, William P. Foley II himself owns 9.3% of the company's stock. The management and directors collectively own 13.4% of the outstanding shares, a pretty significant stake. This high ownership among leadership is something Warren Buffett often likes to see, as it aligns their interests with shareholders. A significant detail is their past management services agreement with Trasimene, which they've been winding down. The named executive officers, particularly Mr. Foley, Mr. Caswell, and Mr. Massey, had an interest in fees paid to this manager. While they are moving away from this external management structure, there were still millions paid out. There are several related party transactions mentioned. For example, the company has a revolver note with Fidelity National Financial, where Mr. Foley is also a chairman. They've also invested in Black Knight Football and Minden Mill, where entities affiliated with Mr. Foley are involved. The board has reviewed and approved these transactions. This section details who is considered a participant in the proxy solicitation for the company nominees. It mainly includes directors and executive officers and shows their stock transactions. This is the actual proposed amendment to the company's charter to declassify the board. It spells out the transition to annual elections for directors. Now let's break this all down. The core story is a company navigating a proxy fight while trying to execute a strategic shift. The board wants continuity and believes their nominees are best suited to continue their long-term strategy and value creation. Cannae, on the other hand, likely believes a shake-up is needed to unlock shareholder value given the stock performance and discount to net asset value mentioned. The company's financials and strategy show a move towards private investments and returning capital to shareholders. The significant stock buybacks and dividend are positives for shareholders. However, the significant compensation paid to executives, especially the one-time awards tied to specific events, does raise an eyebrow. The pay ratio of 808 to 1 is eye-watering, but the company notes it is heavily influenced by a one-time award and expects it to decrease. The sheer scale of Mr. Foley's compensation and advisory fees stemming from the old management agreement are substantial and warrant close examination from investors. The company seems to be making progress on returning capital, which is good, but the ongoing activist pressure from Cannae signals that at least some shareholders are unhappy with the current direction or pace of change. The declassifying the board proposal is a step towards greater shareholder accountability. Ultimately, the outcome of this proxy fight will depend on how shareholders vote. They have to decide if they trust the current board's strategy and nominees, or if they believe Cannae's proposed changes are necessary. The financial tables, while complex, show a company with substantial assets actively managing its portfolio, but also facing significant operational and strategic challenges. The divergence between the company's reported TSR and its peer group TSR alongside the net losses is a point of concern. So what is my take on Cannae Holdings Incorporated? They are actively trying to return value and have some genuinely impressive investments that have created significant returns in the past. However, the current compensation structures, especially historically, and the significant outflow of funds from management agreements might be a red flag for some investors. The proxy fight itself highlights a disconnect between management and a significant shareholder group. The company's direction seems clear in focusing on private investments and capital return, but its execution and transparency, particularly around valuations of private assets, could be improved. The looming proxy battle introduces a significant risk and uncertainty. That is my take on Cannae Holdings Incorporated latest proxy statement. What are your thoughts on this corporate battle and the numbers presented? Let me know in the comments below. If you found this analysis valuable, please smash that like button and subscribe for more deep dives into corporate finance. And don't forget to join our Discord community, linked in the description for more discussions and insights. Thanks for watching, and I'll see you in the next one.